You might think FHA mortgages is an easy way to start buying your first home, but let me tell you what's really going on in 2025. Here's a recent chart that shows the number of FHA mortgages, percentage-wise, that are at least 30 days late in their mortgage payment. You can see this number has jumped up substantially in the first quarter of 2025. Here's a map of the entire country that kind of gives you an idea of where a lot of these FHA delinquencies are starting to take place. A lot of them happening down there in the Southeast. And then you also have states like Nevada, where probably a lot of homes in Las Vegas, people are not making their mortgage payments. This is why strategy matters so much instead of chasing the easiest entry point or the lowest interest rate. Slight market pullback, any of these FHA loans could be underwater easily because you're only putting 3.5% down. That's not even to take into account all of the people that used FHA financing but also have some sort of second mortgage where they utilize down payment assistance or some type of community grant access program to get them into their home. Number one piece of advice I would give you if you're looking to buy a home this year is buy something within your budget. Just because you're paying X amount of dollars of rent for a property, that does not equate to a mortgage. I hear this all the time where clients are like, I paid $3,000 a month for rent, I should be able to afford a $3,000 a month payment. No, that's not the case because your debt to income ratio could be way out of whack. It's just you're living paycheck to paycheck. You have no extra money. And yes, you are making the payment every month, but that doesn't mean you can afford it. When you get qualified, it's not about the lender max qualifying you for your mortgage or the real estate agent telling the lender what is the maximum amount that you can buy. Because in most cases, that's what they're trying to do. They're trying to find out what's the most house that you can afford. I shouldn't even say afford. What's the most house that you can qualify for? Because in an FHA loan, you can actually qualify for more than 50% on your debt to income ratio, which means 50% of your gross monthly income, a lender can qualify you for a mortgage. Now think about that for a second. Your gross income is before taxes. So what happens after you take out your taxes, your retirement, or anything else that you have? What was your true take-home pay, and how much of that represents your monthly mortgage? I hate to see homeowners save up, build up their credit, do all the right things to buy a house, to then only be house poor. And the minute something happens, whether you need to repair something, fix something, or you have a life emergency, you have no savings, and now you're making a decision, do you cover the emergency or do you make your mortgage payment? These are the questions you should be asking yourself or the conversation you should be having with your lender and your real estate agent. If you're not having those conversations, fire them and find someone else.